So for Forex in 5 this week, quickly on developed markets, there's not really been too many moves recently. We saw that the UK has officially gone into recession after 2 negative quarterly GDP growth figures. However, we're not reading too much into this. We expect it to recover. Similarly, cable sterling hasn't gone down too much, so there doesn't seem to be too much concern in the market. At least whatever negative prints were due were already priced in. Generally, though, in the US, we're still focusing on future CPI prints. We know that Jay Powell, the Fed chair, has got a penchant for cutting rates with his dovish view. He's had this view pretty much through his whole tenure at the FOMC. So we may start to see some more cuts than what's already priced in just from his influence, but clearly he's going to need some sort of consensus within the Fed. But 2 to 3 cuts is still on the table for this year in the US, and that will probably dictate where GBP and Euro trends going forward. Over in emerging markets in Nigeria, some big moves actually. So we've seen a 400 bp rate hike in Nigeria from the MPC. This was pretty well received. I mean, there was a variation of expectations, sort of 250 basis points seems to be the consensus. But it's good to see they're really punching rates up towards where inflation is currently trending, because obviously CPI has been printing higher. However, maybe more importantly, we're now seeing missives around the BDCs getting sold dollars directly from the CBN at much lower levels than where both the official and the parallel rate are currently trending, so sort of around 1,300, at which they're allowed to sell that within 1%. Now, we do question how easy it's going to be for the CBN, EFCC, etc. to police where the BDCs are actually selling these dollars. I think it could be quite tempting for them to try and just flip them quickly at, say, 14.50 and make a good bit of margin, but that remains to be seen. The trading window that was opened for anybody to come and do up to $100,000 directly with the CBN seems to be a much better vehicle to control where the parallel rate is trending, to stop those small trades on the street dominating where the parallel market is currently trading. Now, the official, when we look at the NAFEX and NAFEM rates, they are actually trading above the parallel at the moment, which is something we've not seen for some time. However, we seem to start to get some more visibility on this in the next coming weeks. Over in Kenya, similar to Nigeria, we saw a 50 bp rate hike. Naturally, they're trying to stem the depreciation that's been seen in the shilling over the last few months. When we last spoke on Forex in 5, we'd seen a massive drop in the rate of Kenyan shilling by about 10%, largely dominated by, we think, panic selling of dollars by the local banks. Now, the rate has come back up slightly. We're sort of trading in the 147 to 148 kind of range, but it's a nice bit of stability that we're now seeing. Day to day, it's changing where the dollars are allowed to sell dollars, how much they're allowed to sell. It's relatively hard to predict. I think it's fine for now. It's keeping the shilling stable, which is probably priority number one after so much depreciation. However, at some point, the currency needs to be a bit more seamlessly traded, slightly less manipulated by what the banks are doing, especially given that Kenya has now been added to the FATF grey list. This sort of came out of nowhere, to be honest. It's happened with other frontier countries in the last sort of year, 2 years. Didn't see Kenya coming up on the books, but it doesn't seem to have caused any panic in the short term. Like I said, the currency stayed relatively stable. So it's something that we're monitoring, but it's not something that we're too fearful of in the short term. Over in Tanzania, we keep expecting to see some stability in the currency. Again, it's probably one of the lowest inflationary environments in the whole of Africa at the moment. However, we're now seeing rates trending higher and higher. We're sort of starting to hit 2,900 on cash levels, which is significantly higher than what we've seen over the last sort of 12 months. Again, it's something that we're monitoring. It doesn't seem like the BOT have any immediate panic or concerns to try and stem this. It's more just a natural case of the people trying to source dollars, source liquidity in the market. There seems to be a lot of Tanzanian shilling out there for sale, so we'll continue to monitor it. I'd like to think there's going to be some pullback soon. It's just a pure demand supply play, so we'll see how that plays out in the next month or so. And finally, in Central African franc, bit of stability because we've seen some ZOF weakness over the last couple of weeks, but we're now seeing rates stabilise to where we're usually seeing them. Euros off at around 7.05 and Euros off at 7.15.